Hello everybody, this is Price Headley. Happy new trading week to you, and we're excited to bring you another video market outlook from Big Trends here on June 22nd, 2009. Here we're looking at the S&P 500 index on a daily chart, and you can see that actually we've had a pretty significant break under the key 80 test that we talked about at the beginning of last week, which then violated as we looked at last Tuesday's action. And in fact, if you follow our Twitter posts at twitter.com/bigtrend, we actually posted that we had gotten a bearish signal on the SPY here as we broke down middle of last week. So today the market continues to fall after a late bounce last week into the June expiration, and we're expecting that you'll see a continued choppiness in the market. 90 is a big technical support level for the market. The next big technical support is down for the SPY, S&P 500 spiders, down around 88.5 or so. So here we are sitting just at 90 as we speak, 90.3. So SPY is broken. The Dow, the DIA, is the next one we look at, and that one is also showing a %R breaking down here, but it hadn't followed through last week. If we finish today where we're sitting right now, about 84.2, the equivalent of about 84.20 on the Dow Jones Industrial Average, that would be a breakdown under last week's key low, which was 84.83. So that would be bearish confirmation of what we saw in the S&P last week in the Dow. The Qs in the meantime have been the relatively stronger index. As we look at the Qs, you can see they're not below their midpoint %R 50 level yet. They are just breaking the 20-day moving average, which is in the middle of our red acceleration bands here. You can see that that's a first break under the 20-day, but of course you can occasionally see one-day breaks like you saw back last month, and that doesn't necessarily mean it's bearish for the Qs until we break under this 50 threshold and then follow through. Both times last month in May that we did that, the market did not follow through. That held in place for the bullish side. So the Qs still looking a little bit more bullish than bearish for now, but all three of these major indexes are stuck in the trading range. And so from that perspective, we have to look at it and say, okay, we're really concerned about the market basically evolving after the monster run, one of the strongest 3-month runs that we've seen in the market over the last several decades. You look for a trend watch on that from us in the next couple of days as we're doing some research on that, and the implications for the market going forward. Makes sense that the market should be backing off somewhat. We still have the volatility index sitting around the 30 level, give or take. 30 remains a major line in the sand for the VIX, and we'll be watching that this week as well. But right now, expect more choppiness. Definitely seeing a lot of these trends that were upside trends now broken back into the trading range and now evolving, like we showed you with the S&P 500, into a short-term bearish trend. So stay on alert and be ready for the change in the big trends, and have a great trading week ahead.